Hello and welcome to Martyn Lucas Investor. My name is Sensei and we are here for another important live stream. It seems to be all going on at the moment. We're going to be digesting the PPI inflation shock that came out yesterday. We've got a possible Japanese rate hike and we know the what comes with that. We've got recession fears now, especially with what's happened yesterday with inflation. And we also have potentially SEC Chair Paul Atkins coming out and giving us a speech on Project Crypto. So a lot to get through in today's live stream. Even if you're watching later, all of this information will still be relevant. And also, don't forget, we've got the biggest event of all that Martyn will be covering live on the show, which is the Putin and Trump meeting. So we'll see how that unfolds. Martyn will be covering it live on the show. Someone's just sent a very nice comment. Thank you so much for your consistent live streams. I'm up a considerable amount these past few months. Now I was able to open a joint account for my family. This is what we do it for. Wow, so lovely to hear, Power Fuller. Very nice story. Thank you so much for sharing that with us. But do remember, nothing we ever say is financial advice. These are thoughts and opinions only. Excuse me. Our thoughts and opinions only. So good luck with all your trades, but it is you who do your trades, and you come here for the community and the information. So, yesterday we had a massive shock and the bull market, unfortunately, could be over. Do I think the bull market's over? Well, I will come on to my personal opinions, but first we need to look at the facts. Yesterday, and this is why it's the one big thing in the newsletter today, remember the newsletter you can get, it's the first link in the description. It's producer prices just posted their biggest monthly jump in over 3 years. July's PPI surged more than 0.9%, more than quadruple expectations. Go back and watch yesterday's show. If you haven't watched... Thank you, Mike says, bless you. Thank you. If you haven't watched yesterday's show, it was quite an exciting one. Go back to yesterday's live stream, my morning forecast show from yesterday, the PPI show. And what you need to do is you'll have the timer up on the screen and it says when PPI data is coming out. Go to about 2 minutes before and start watching from there. It was a massive shock, not just for me, but the markets. I'll see if I can play a clip from that later, but wow, that was a big shock to us all. I actually did a live trade on the show. I was planning to do a big long position as soon as the data was better than expected, but unfortunately it was completely opposite to that, and then I switched my mind. I went into a short and I did a 50x short, and I told everyone, please do not follow me. It's just very high leverage. I'm ready to lose the money, but I did in fact make money from it. I don't like making money from shorts. I would have much preferred to have gone long, because I've got a lot of my spot position is in crypto. I want it to do well, but I had to hedge against my portfolio as soon as that information came out. So it was quite an exciting live stream yesterday when the news came out. So do go and check it out. But the shock is PPI was the biggest monthly jump in over 3 years. And it quadrupled what the expectations were. How's your short going? Closed it. I closed it yesterday. I didn't get greedy. I closed it. In fact, I opened another one, but I got stopped out at break even. So basically, definitely ended up on the day. Money move of the day. I won't go into that. You've got the market snapshot. So today, this is what Martyn's going to be covering. I'm going to come onto the PPI and all of that in a second, because that's the main story we're going to be focused on. But Martyn is going to be covering, and I want to let you guys know that Putin-Trump Alaska Summit market rally on diplomatic hopes. We are having a rally pre-market on the crypto market, and also on the stock market up 0.2%. We're nearly back at all-time highs for the S&P 500. So we're hoping that goes well. And Martyn will be covering it live. So Donald Trump and Vladimir Putin are set to meet today at 11:30 a.m. That's UK Alaska time. That will be 3:30 p.m. Eastern time, and Martyn will be building that up and going live with that. So I'll leave the story for Martyn because I just want to let everyone know that that's what's going to be happening live on the channel. If you are here with us right now, please make sure you are hitting that like button. You have subscribed already. We are on our road to 100,000 subscribers, and I'll be giving you a chance to win $1,000 live in the show. So Japan, this is another story. I'll come back to the Japan story. What we want to do first is unwind this PPI. There's also another big story here. We've got the sort of shift on the Bitcoin reserve strategy from Scott Besson. We were under the impression that the US government would be buying Bitcoin. Well, that's what the market was under the impression. But we've got confirmation that they're not buying Bitcoin. So I'll go into that story shortly. And also another story is Project Crypto by SEC Chair. We'll hopefully be able to cover that live on the show as well. And a little fun story here for you. China launches world's first robot Olympics. And I don't think we'll have time to go through that story, but it's in the newsletter. So time for the big story. Time to wake up. Producer price shock. Dissecting yesterday's inflation wake-up call. Are you ready to dissect it? Please make sure you've hit the like button. Make sure you're subscribed. Here we go. We do have a poll running right now if you're watching live, which is, are you still bullish on yesterday's shock PPI? After yesterday's shock PPI, 73% of you are still bullish. I'll give you my thoughts in a second. So let me zoom this in so you guys can read it a bit better. Maybe there. So July's producer price index PPI surged 0.9% month over month, more than quadruple expectations, marking the steepest wholesale inflation rise in over 3 years. The sharp uptick signals a potential shift in the inflation outlook with implications for the Federal Reserve policy and market sentiment. The numbers that shook the market. PPI rose 0.9% in July, blowing past the 0.2% forecast. Year over year, PPI hit 3.3%. That's not a good number for inflation, up from 2.4% in June, the fastest pace since February. Core PPI, excluding food and energy, jumped 0.6%, the largest since March 2022, and 2.8% year over year. So you can see the main reason the market reacted so negatively is because that was not what was expected. The consensus was much lower. That was a shock. That is inflation a big uptick in PPI, a way of measuring inflation. So let's just understand what PPI is and the economic thermometer. So the producer price index, and this is what came out yesterday. We'll go through it step by step. I want everyone to fully understand what's going on. You need to understand what's going on in the market. You need to understand what these figures are so you can make some more informed decisions. So the producer price index measures for their output, serving as a critical upstream indicator for inflationary pressures. Unlike CPI, Consumer Price Index, which tracks retail prices paid by consumers, PPI captures wholesale pricing dynamics through the production chain, from raw materials to intermediate goods to finished products. So this is before it gets to the consumer. This is giving us, PPI gives us a little look into what could potentially move into what the consumers pay. The CPI prints. This is up the chain. This is what the producers are paying. This is the inflation of the producers, whether it's from the raw materials, the immediate goods, the finished products, what they're paying, the producers, the businesses, what are they paying? If that's going up to such a large extent, we might see this come into CPI. So it's a great way to have a head start or to think ahead of and get ahead of the curve of what can potentially come our way. So this positioning makes PPI a valuable leading indicator for consumer inflation. Economic theory suggests producer cost increases eventually transmit to consumer prices as business pass through higher input costs. So you will expect to see what happens in PPI to eventually transmit to CPI. That doesn't mean it'll happen that month. The businesses might take on that increase and not pass it on to consumers, but it does seem like we're at the point where the businesses can't take it anymore. They can't, or at least some businesses won't be able to absorb the cost themselves. They don't have the inventory prior to tariffs, and this is all based off basically tariffs that is causing this now. They've tried to not pass it on. Some have had to pass it on, but most haven't passed it on. They've taken the hit themselves, whether it's getting rid of some jobs, whether they had inventory from before the tariffs were inputted. It now looks like we are expecting this to pass through to CPI, potentially. I've just got a message here come through from Martyn. Oh, and your audio is cut in and out. I don't think so. Pass it on. I'll check. Some have had. If you're having audio issues, please do refresh. This is a YouTube thing. Refresh if audio issues. Refresh if audio issues. Please just refresh the stream. If you're on a browser, just refresh. If you're on a phone, come out, go back in, type in Martyn Lucas Investor, and you're all good. Martyn just messaged saying, I sold heavy on the S&P 500 and bought defensive Coca-Cola. Carry trade, recession fears and Trump summit. Not financial advice, another win trade. Congratulations to Martyn, who has been doing some great trades recently, especially de-risking himself with all this information. Audio is fine. Restart YouTube. Yeah, all good. Yeah, just restart. You're back. This is important. You guys need to make sure you have all of this information. I'm just communicating with Martyn because he's getting his stream ready for Putin and Trump. So I can go for another. So the positioning, okay, back to PPI. We're going to be having an extended show. We're going to be going for another 55 minutes, so do stay with us. If you haven't hit the like button, please do that. If you haven't subscribed, please do that. Leaving soon, just popped home for some lunch, says Vaz. Great to have you in the show, Vaz. Thank you for popping in. Center, you're good. Martyn just has too many charts open. I don't know what you mean. Okay, here we go. So the positioning for PPI, a valuable leading indicator for consumer inflation. Economic theory suggests producer cost increases eventually transmit to consumer prices as businesses pass through higher input costs. So this doesn't mean CPI next month has to be higher. This means eventually, in theory, and there's different ways where this might not happen. In theory, this will pass through to consumers. Research consistently demonstrates this transmission mechanism. Studies from multiple countries show that PPI changes typically lead to CPI movements by 1 to 3 months, with pass-through rates ranging from 25 to 35% in the short term. So research suggests, and we've got the papers here, you can go and click on the sources, you can go and read the papers, the research papers out there that do suggest all of this. I don't just take my research from random places. We do have confirmation on these research studies, so this is not just taken randomly. This is research that gets put into the newsletter every morning. It does suggest that in 1 to 3 months, most likely, we will start seeing this affect CPI. And the pass-through rates are between 25 and 35%. So not as big jumps, but a certain increase is expected. The Bank of England's analysis reveals that during major economic shocks, whether the 1970s oil crisis, the 2008 financial crisis, or recent pandemic disruptions, producer and consumer prices maintain their co-movement relationship through with timing disparities and varying transmission speeds. So one thing that we're quite confident on is that PPI going up, we will start to see that in CPI. PPI, remember, is first, and then we start seeing it, the producers first, and then it will be in passed through to consumers. So we're quite confident that we will start seeing this in CPI. What we're not so confident on, and it's hard to tell, is how long until we start seeing it in CPI, and the amount of inflation that's gone up. How much is that going to be passed on to the consumer? So what we've taken away from that is CPI is probably going to go up at some point soon as well in the next few months. The tariff connection, and remember, this will come on to what this means for our portfolios, what it means for rate cuts, and all of that sort of stuff. But we first want to understand the fundamentals. Vaz has just put a message. Let me just go to his message. He says, just friendly info. I'm not rushing in to buy any EVTOL stock this or next week. I expect price retractions, especially Archer and Joby. Also expect vertical to go below $5 and then recover. Not financial advice, just my opinion. Thank you, Vaz, for keeping us up to date with what you are up to. I've also slept for 4 hours and drank a lot of Red Bull this morning. Okay, so going be bearish today. Start shorting now. Heavenly, I wouldn't be doing that because markets can be irrational. So the markets and the economists can know that this is happening, but the markets can be irrational and go up. And that's a weird phenomenon. Something like, think of Palantir. It's completely irrational that it's valued where it is. The PE ratio is completely off the charts. However, it keeps going up. The market's irrational. It doesn't make sense, but it happens. Everyone, even if we 100% knew that the CPI is going to go up, which we sort of are quite confident at this point, that doesn't mean the markets won't stop rallying. It doesn't mean that we won't still be bullish. The markets can be irrational. So take that into account. Just because this is a negative story doesn't mean it'll have a negative impact on the markets. But we'll come on to my thoughts. I just want to give you that thought while I saw that comment. Anyone think VIX is a good buy right now? If it is at multi-month lows, I wouldn't mind buying some VIX, but that's not financial advice. Anyway, so now we go on to what's causing all of this, and some of you will not like this, some of you will accept it, some of you might say it's a necessary evil. I'm not going to get political about it, but I think we can all agree that this is the fault of tariffs. So the tariff connection, pipeline pressures building. The PPI surge cannot be divorced from Trump's administration's aggressive tariff agenda. Trade exposed goods are rising at a rapid clip, with economists noting that businesses' willingness and ability to absorb tariff costs appear to be waning. So let me make that clear. I'll explain this again. Tariffs, at some point, the consumer will have to pay the price. This is not, if you're importing something, if you're looking at tariffs, it's not the person you're buying from outside the US that pays the tariffs. It's the people in the US that pay the tariffs. It's the person that's buying the goods. The goods come off the ship or off the plane or however they come. And then the person buying those, that US business or that US company that's buying these goods will then pay the tariff. So the other countries don't pay the tariff, the US pays the tariff. And once the US pays the tariff, well, those people that are buying these products have to somehow continue surviving with the increased cost, whether that's a 20%, 10%, 30%, 40%, 50%, 60% tariff. They're going to have to pass on that cost or absorb it themselves. They've got two options. They're paying the price. What are they going to do? Are they going to reduce from their margins and take on the business? Is it going to reduce from its margins and take on the cost itself? Or is it going to increase its prices and put it onto the consumer, or a mix of both? Take on some costs themselves, reduce some staff, increase unemployment. Are they going to just pass it on to consumer itself, or a bit of both? Are they going to reduce their margins and also pass them on to the consumer? It is sort of inevitable that the consumer will probably take on some of the increased prices. And The reason we haven't seen much of it now is because the businesses didn't really want to raise their prices. They probably had inventory from before the tariffs. They probably brought in a lot of inventory. I mean, look at Apple. They flew in planes and planes and planes worth of iPhones before the tariffs hit China. They might have the inventory to survive, but the tariffs are now being solidified. The research suggests that they cannot keep taking on the costs themselves. The ability to absorb the tariff costs appears to be waning. And that's why we're starting to see it come into fruition. The average effective US tariff rate has now reached 22.5%. That's the average tariff that US businesses are paying now. That's the highest since 1909, following a comprehensive tariff implementations throughout 2025. Initially, many businesses absorb tariff costs. Rather than immediately passing them to consumers, temporarily cushioning retail prices. So they absorbed it. Instead of passing on to consumers, they cushioned the retail prices. However, this strategy is proving unsustainable. Portfolio management fees soared 5.4% in July alone, reflecting the complexity and cost of managing tariff-exposed supply chains. Machinery and equipment wholesaling jumped around 3.8%, directly reflecting tariff impacts on industrial goods. Yale Budget Lab analysis suggests that 2025 tariffs could raise the overall price by 2.3% in the short term, equivalent to $3,800 in annual consumer losses per household. That is what some research is suggesting, that each household is going to have to pay for this. $3,800 there in the US. Historical context, lessons from past PPI shocks. Past inflation shocks started with producer prices. That was our first indication, and that's our first indicator now. It could be now. That's why we're looking at it. This is why we're having such an in-depth report into PPI. In 1973 and 1974, PPI increases foreshadowed CPI spikes that forced Fed tightening. A similar pattern emerged in 2008 and again in 2021 and 22, where PPI accelerated months before CPI peaked. So we have seen evidence in the past that when PPI starts accelerating, CPI could be next. Transmission mechanisms. When producer costs become consumer prices. The transmission. When producer costs become consumer prices. Producer costs pass through via pricing strategies, usually within 1 to 3 months. Strong demand allows quicker pass-through, weak demand delays it. Today's resilient demand and tight labour markets makes pass-through more likely. Broad base increases across goods and services suggest multiple transmission channels are active. What we're covering here is the idea that if there is strong demand for these products, the inventory gets finished quite quickly, and therefore you'll start seeing the prices come in. If there's weak demand for these products, then it takes a while for the price to be brought onto the consumer. So we are looking at strong demand at the moment, so we're probably going to see it reflected in CPI in the next couple months rather than the next 3 or 4 months. Market implications, recession fears versus persistent inflation. Are we going into a recession? Make sure you guys have hit the like button and subscribed. I hope you appreciate the information we're providing here today. Market implications, recession fears versus persistent inflation. The market reaction was swift but measured. Stock futures declined modestly while Treasury yields rose, reflecting reduced expectations for aggressive Federal Reserve cuts. The probability of the September rate cut dropped from 100%, remember we were covering that before, to approximately 94.5%, with expectations for a 50 basis point reduction were completely eliminated. So just before the show, I'll refresh it again to make sure nothing's changed. 92, no, it's all the same. So what we've got on the screen here is what we're expecting for September rate FOMC meeting. Before yesterday's PPI results, we had an 100% chance of a rate cut. Not only was it a 25 basis point rate cut, we actually had about a 5% chance of a 50 basis point rate cut. That 50 basis point rate cut has completely been eliminated, and in fact now we've got a chance that there won't even be a rate cut. Expectations still are that we will get a rate cut. That is still what's expected. I think the Fed will probably still do that, depending on what our next inflation report data will be. And we'll be covering a speech in a couple next week, where we'll get some more information on that. But we can see that it certainly affected the decision of larger rate cuts, and even brought in a possibility of no rate cuts in September. Look, there is probably still going to be a rate cut, but then the rate of rate cuts, the amount that happens this year, is probably going to drop because of the news. This recalibration reflects a fundamental shift in the inflation outlook. The benign July CPI report released earlier in the week has reinforced expectations for monetary easing. Remember 2 days ago or 3 days ago, we covered CPI. It looked brilliant. It looked great. That's why we were excited about PPI. But it was it seems pretty benign now. So the benign July CPI report, the consumer one, the one that came out 3 days ago, released early in the week, has reinforced expectations for monetary easing. That's what's pushed us to say that there's going to be there could be a 50 basis point cut, and that there was a 100% chance of rate cut. CPI looked great. However, the PPI shock suggests inflationary pressures could be building upstream, even if not visible yet in consumer prices, and that's why we're worried. 2 scenarios emerge from this development. Now we're looking at what the markets, there's 2 scenarios. The optimistic view holds that this represents a one-time tariff adjustment that businesses will absorb without significant consumer price transmission. That is the bullish case. This is a one-time thing. Businesses will absorb it once again, and it won't affect CPI. Under this scenario, CPI remains relatively stable, and it allows the Federal Reserve to proceed with measured rate cuts. Remember that, because I'm going to ask the audience now which one you think is scenario 1 or 2. So scenario 1 is the optimistic view. This is a one-time thing, tariff adjustments, businesses will absorb it, consumers won't see too much of a difference, CPI remains relatively stable, and the Federal Reserve will continue with their rate cuts, and we'll start seeing more and more rate cuts. That's scenario 1, the optimistic view. Remember that, chat, because I'm going to come back to you, and you're going to tell me which one you think. So that's scenario 1. Now scenario 2, the pessimistic scenario. This scenario envisions accelerating producer costs pass-through over the coming months. And what we mean by that is passing from the producer to the consumer. So this pessimistic scenario envisions accelerating producer cost pass-through over the coming months, forcing the Federal Reserve to maintain restrictive policy longer than anticipated. This will increase recession risks as higher borrowing costs weigh on economic activity. Historic precedent shows that when PPI accelerates this rapidly, consumer price pressures typically follow within 2 to 4 months. So, do you think... Are you with the optimistic view? Put in scenario 1, or just type in 1 in the chat. It's just a one-time thing. It's not going to transmit into CPI. Or are you pessimistic? Do you think that it's going to move into CPI? Consumers will start having to, consumer inflation will start going up. What do you think will happen? Are you pessimistic? Do you think that they're going to hold rates higher for longer? Even that this scenario even does still envisage that we'll have a rate cut in September. It's not all about a September rate cut, it's about how many rate cuts we get. The pessimistic scenario still would say that we would get a rate cut in September. That's sort of already baked in. But we're looking at the bigger picture here. The pessimistic scenario says that we're going to be holding them higher for longer with more rare rate cuts. The optimistic view says we are all good. CPI won't be affected. 4 months down the line, we're going to just be cutting rates because CPI won't be affected. Let me know in the chat. Are you optimistic? Put in number 1. Are you pessimistic? 2. Not you personally. Are you optimistic or pessimistic, or the pessimistic scenario or the optimistic scenario? Let me know, and let me go into the chat in just a second. Here we go. What are your responses? 1 or 2? Scenario 1 says Vince. 2. Selling heavy now. What's selling heavy now? Is it the Ethereum? Markets are fine. Selling heavy now. Is Martyn's... I think Martyn means he's selling his portfolio heavy now, I think. Selling heavy now, 1. Okay, you're highly optimistic, says high energy investments. Look, this is... Oh, Martyn is de-risking at all-time highs. He is de-risking his portfolio and he's selling some at all-time highs. I'm sure we'll get an update from Martyn. He is giving it to you right now in the chat. He always said whenever he does something, he'll let you know. But he will be updating you when he goes live. Look, the one thing I want to stress is the market can be irrational. You can have the worst news in the world and the market will go up. You can have the worst earnings in the world and the stock will go up. You can have the worst PE ratio in the world and the stock could go up. You can have the best news possible and the stock will go down. You can have the best outlook possible and the economy goes down. Eventually it will catch up with whatever the real news is, but in the short term, the market can be irrational. So even if I personally think that we are under the pessimistic scenario, I think we can still have a bull market for another 3 to 6 months. I think this will catch up to it, and I think we'll have a recession at some point in the next 12 months. I think we'll get a recession probably in 2026. But I think the markets can still go up. It can be irrational in the short term. And there's many examples of the market being irrational in the short term and then catching up. Just like everyone talks about the debt of the US. It goes up, it goes up. Everyone knows that's a massive issue and people's children will have to face the consequences of that. It's a massive issue, but no one cares because we will just keep adding to the debt, the national debt, and at some point we'll face the consequences. But everything's okay now, but in the future it won't be okay. So the markets can be irrational. Let's go on to what the Federal Reserve's policy dilemma is. The development significantly complicates Federal Reserve decision-making. Officials have emphasized their data-dependent approach, making each new inflation reading crucial for policy calibration. The PPI shock provides ammunition for hawkish officials advocating caution on rate cuts, even as employment data suggests labour market softening. So, who was right? I know a lot of people probably in the chat hate Jerome Powell, but you have to look at the numbers here. PPI looks bad. CPI doesn't look brilliant. And the way to keep those under control, well, you can't just cut rates when you don't want inflation to get out of hand. Remember what happened back in, 1980s or something like that, where you brought inflation down, you started cutting rates too early, inflation went back up, and you had one of the worst catastrophes ever in the US economy because you cut rates too early. And now we can see why the Federal Reserve wants to keep an eye on the data, because you don't want to start cutting too early. And this will be a big blow to Trump, because Trump says he had to keep cutting, and now he's going to see the inflation data. He's probably going to say it's all a joke and it's all lies. We don't know. But Jerome Powell, what's important and what's going to happen is Jerome Powell is going to come out and say, look, PPI is pretty bad. We're going to need to keep this under caution. We might cut rates. They probably will cut rates in September, but we're going to be very cautious. We can still see a path down to 2%, but we don't want to get ahead of ourselves. So we're going to do a rate cut here, but we're not going to do any more until we start seeing that PPI isn't affecting CPI. That's probably what they're going to do in September. So the divergence between consumer and producer price trends creates particular challenges. While July CPI appears benign, PPI suggests inflationary pressures are building in the pipeline. This echoes the Fed's experience during 2021, when officials initially dismissed supply chain disruptions as transitory before being forced into aggressive tightening. Federal Reserve Chair Jerome Powell upcoming Jackson Hole speech takes on heightened significance in this context. Markets will scrutinize his commentary on inflation dynamics and the policy implications of producer price pressures. I don't think we're going to have any major moves until this. because Jerome Powell's speech, and I think it's next week if I'm not mistaken. Jerome Powell Jackson Hole speech. I'm just going to check that on the internet. Let me go over here. I think that's next week, and I think they're going to make a pretty. July the 22nd. I think it's this time next week. This time next week, we're going to be covering this event live on the show. And it's going to be it might be our largest ever event, because this is the most important event, because this is when Jerome Powell is going to come out and we're going to hear his thoughts on PPI. And that will tell us what's going to happen in September and the rest of the year. So we're going to keep a good eye out for that. So make sure you are subscribed so we'll cover it live on the show. So forward-looking assessment. Is this a one-off or is this a trend reversal? The critical question is now whether July's PPI surge represents a temporary adjustment or is it the beginning of a more sustained inflation resurgence. Several factors suggest this may not be an isolated event. First, tariff policies remain expansionary, with additional trade restrictions under consideration. The administration's comprehensive approach to reshoring manufacturing and reducing import dependence creates ongoing upward pressure on producer costs. You can't really debate that. That's what happens. You want to bring the manufacturing back? Great. I think it's a brilliant play. I think the US should be manufacturing more within the US itself. I think everything should be US made. I'm in complete support of the fact to take manufacturing back from other countries and build your own economy and bring more jobs. However, that doesn't come without any impacts. Otherwise, everyone would do it. Otherwise, Biden would have done it. Otherwise, all the other presidents would do it. They probably didn't have the... I don't know if I can say the word on the show, but to do it, they couldn't, they didn't, they didn't have the strength to do it. Trump does. Brilliant. Amazing. Bring all the jobs back. Bring the manufacturing back. No one can really argue that that's a bad long term. However, short term, you have to understand the issues with that. And the issues with that would be, or the consequences, not really an issue, the consequence of that is that will create reshoring all of those manufacturing back to US. It's going to increase costs. It's going to increase upwards pressure on producer costs. And that normally comes into CPI. So people are their bills are going to go up. People are going to spend more. This is going to be reflecting in consumers in the US. The manufacturer, the producers, the companies in the US will have to start paying more. Everyone's going to have to start paying more for this to happen. But is it for the greater good? I think so. You might not think so. But that's the reality of it. Prices will go up. Second, global supply chain vulnerabilities persist. The geopolitical tensions in key shipping routes and ongoing distributors in critical commodity markets maintain the potential for additional supply shocks. Third, labour market dynamics continue supporting pricing powers. Despite some softening, unemployment data remains low and wage pressures persist, providing a foundation for sustained cost increases. However, mitigating factors include business adaptation to tariff environments through supply chain diversification and potential for productivity gains to offset cost pressures. Additionally, if the PPI surge stems primarily from a one-time tariff adjustment, the effects may not compound over time. That's the $1 million question. Is it a one-time thing, a one-time price increase, or are we going to see an uptick in inflation? Because if we're going to start seeing an uptick in inflation, we might even start seeing rate hikes come back. Or we might not see rate cuts for a year or two. Or we might see emergency rate cuts. None of those options are brilliant. So the strategic implications for markets and policy. The PPI shock fundamentally alters the inflation risk calculus for the remainder of 2025. The combination of tariff-driven cost pressures and resilient domestic demand creates conditions conducive to sustain producer price inflation. For equity markets, the implications are complex. While reduced rate cut expectations weigh on valuations, companies with strong pricing powers may benefit from improved margins as they successfully pass through costs. Sectors with significant tariff exposure face ongoing margin pressure until pricing adjustments are implemented. Bond markets face the prospect of higher for longer interest rates if producer price pressures persist. The yield curve may steepen as longer-term inflation expectations adjust upwards, even if near-term consumer prices remain contained. For policymakers, this development underscores the importance of monitoring upstream price pressures even when consumer inflation appears benign. The lag between producer and consumer price movements mean that by the time CPI accelerates, inflationary momentum may already be entrenched. The July PPI shock serves as a stark reminder that inflation dynamics remain fluid and policy sensitive. While single month data does not determine policy direction, it significantly raises the stakes for subsequent inflation readings and Federal Reserve communications. The coming months will reveal whether this represents a temporary adjustment or the beginning of a more challenging inflationary environment. And that brings us to the end of that story. So now I said I'll give you my thoughts and what I'm doing. It's a difficult time because we can't take one piece of inflation report and go and make our decisions based solely on that. And what happened yesterday was a shock, was not expected. No one can predict that. And it was surprising. It is concerning. It is a bit scary. Where are we going? Is this the end of the bull market? Well, we can't base it off just one report. We're going to need to see what CPI and PPI are next month. If PPI increases again next month, then I'm going to be pretty bearish, and I'm pretty sure the markets will crash. If CPI is higher next month, then we are not in for a treat. If CPI is good next month, then we're more optimistic. But personally, what I'm waiting for is I'm going to be listening to exactly what Jerome Powell is saying next week, because he is the guy that will make the decisions. He is the guy that's clever. He is the guy that will tell us and give us a hint of what he will be doing in September. He is the guy who will tell us if he thinks this will be moving into CPI. I would really want to listen to what he has to say in that speech next week. In the meantime, what am I doing? Well, I don't have any open leverage positions that on the long side. Even on the short side, I don't. I might open a hedge short position potentially. I'll look into that, but probably not. I don't really like having long-term short positions open, but it might be a consideration for me to have a hedge open. I personally, if I had to guess, is this bull market going to continue or end? I will probably be on the side that I've always been on for the last 4 years, which would be the crypto market will be in a bull market until the end of 2025, potentially into the first couple months of 2026. And over the last year, I've said probably by the end of 2025. So I am still in the bullish camp. I'm not selling my crypto holdings. I am slightly getting a bit concerned, and I don't know if I'm doing the right thing by not selling. But I won't be selling. I still think this is not enough to bring the markets down heavily until we get some more data. If this starts becoming a trend next month with CPI and PPI, and Jerome Powell gives us some bad insights next week, then I'm going to have to reevaluate and maybe open some short positions or sell my crypto holdings. But again, as I said, even with bad news that we had a couple days ago, even with all the bad news, I've just seen a comment from Martyn. Even with all the bad news, the markets can be irrational and they can continue going up. And I hope they're going to be irrational, and I hope the markets ignore it, and I hope everyone continues to be bullish until the end of the year. And then at some point this will catch up and there will be a recession, probably next year, in my thoughts anyway. But it can speed up faster. I want to hear Jerome Powell because he is clever. And Martyn says the quote of the day from Sensei is Powell is clever. Love it. I'm rolling around laughing. Oh God, I don't even know what I say half the time. But yeah, my thoughts are I'm going to stay invested. I'm going to listen to Powell next week. What is he going to bring to the table? What's he going to say? He at the end of the day, he's the one who decides what happens, or he's one of the people that decides what happens with rate cuts and stuff like that. So we will see. I'm going to stay invested. Hopefully the market's going to stay irrational and give us a final pump. We will, and you could see my reaction yesterday to PPI. I was saying in yesterday's stream, we just want PPI to be good, because if PPI is not good, it throws a spanner in the works, and it definitely has thrown a spanner in the works. If PPI was good, we would have been pumping. Ethereum would be at all-time highs. Our altcoins would be pumping by now, and that would just be one more inflation data we dodged, and we could continue moving to the upside, and then we could have even had a 50 basis point rate cut. Unfortunately, we didn't. And it may have put an end to all of that, but I am still in the camp of that I am bullish, at least for the short term, at least for the final months. Because remember, September, October, November, that is when I think altcoin season is going to come. That's when I think XRP is going to hit all-time highs. Are we going to have a big correction before then? I really hope not. We'll see. We'll have to just cover it day by day. I don't want to just give a prediction here and now. Today we're going to crash. There's going to be a recession. All I would say, and this is what I've been saying for the longest time possible, be prepared for a massive pump. Be prepared for this to mean nothing. Be prepared for this to be a one-off thing. Be prepared for XRP to hit $10. Be prepared for the Bitcoin to hit 150, 200,000. Be prepared for Ethereum to hit our targets of 8,000, 12,000. Be prepared for the bullish scenario. That's still, in my heart, what I think is going to happen. But also be prepared for sideways action. Be prepared for the markets not to know what happened is going on, and a good inflation report, then bad inflation report, then a rate cut, then a holding, just a sideways market. Then be prepared for the downwards market. Be prepared for the bear market. Be prepared for a recession. If your portfolio is prepared for all those scenarios, then you're going to be fine, because at some point down the line, we'll be back on top and we'll be reaching those all-time highs. So that's all I can say, and I am prepared for all those scenarios. I would obviously be upset if it's the last scenario where we will go down, but will it be life-changing? Would I be annoyed? Would I not be able to feed my family? Would I not be able to enjoy what I want to enjoy now? At the end of the day, I've put in what I can afford for it to go down, what I can afford to lose. So at the end of the day, I won't be fearful. I'm not going to be scared. I'm not going to be in a bad position if the markets go down. At the end of the day, if you're prepared for all scenarios, you will be fine. Going into your comments now. Crypto is moving up. Of course it is. That's what we said. We're going to have a crash, then a correction. And right now is the correction. Just because I've done a bearish, or not really that, I've done a balanced argument report, doesn't mean that we're going to go down in price. As I said, the markets can be irrational. And they might go up, and they might crash down, and they might pump all the way to all-time highs. But at the end of the day, when you have a big correction on the crypto market that was mainly driven, firstly by PPI, but then liquidations, they will have to buy back their positions. They want to get back in, and then the liquidations, you normally have a sell-off, it liquidates people, and then people buy back in. So you normally have a pump after a big correction. The question is, what's the next move? All-time highs or a lower high and continuing downwards? The one thing that was expected was a dump and a pullback up. The real question is, we're looking at Ethereum here. Is it going to be a lower high? This is the high from yesterday when we were nearly at all-time highs. This is the low from PPI. We were expecting a push up, but the question now is this going to be a lower high and then we're going to create a lower low? That's when you start seeing the trend changing. This was expected. I'm not going to start celebrating the pump we got today, because it would be strange if we didn't pump today. Even in the worst case scenario, if you have a liquidation wick all the way down, you normally pump after it. I would be very surprised if we weren't up today. And yes, we are up, but not even that much. 1%, 2%, 3%. We were completely devastated yesterday in the crypto market. Things were down 8%, 5%, 4%. Even Bitcoin was down about 4%. The real question now is, when you look at these crypto markets, is are you going to put in a lower high and a lower low, or are you going to start putting in higher highs? That's what we're going to be looking out for on a chart perspective. Do we have Jerome Powell speaking? What I'm going to do is just check if we've got Jerome Powell speaking. No, not Jerome Powell. Paul Atkins. Paul Atkins live. Fox. I am expecting Jerome Powell to speak. Oh yeah, we do. Here we go. Going live to Paul Atkins.
To focus on making that announcement become reality. So that's with our corporation finance division, investment management, and others. We're focusing on what we can do to make the regulations of the SEC encompass the crypto assets and also make it so that people can have some clarity going forward. We're working with Congress. Obviously, the Genius Act was enacted here a few weeks ago with a big announcement at the White House by the president himself, and as he signed it. So that I thought was a very good step forward. And now there are other bills in Congress that are being considered, and when they return from their recess, I look forward to much more forward progress.
Yeah, and in terms of that progress, you made remarks, I guess, right after confirmation with respect to crypto custody. Talk to us about that. I mean, you said that the Securities and Exchange Commission needs to revise the current framework. You wrote, you said that the changes needed to the custody rules under the Exchange Act, Advisors Act, or Investment Company Act to accommodate crypto assets and blockchain technology. Tell us what that looks like once, in fact, you take away what has been strangling corporations to have this progress.
Well, so the issues around custody are very important, and for good reason. We don't want just the crypto assets be on some flash drive in somebody's drawer. They need to be in a secure place, and especially if they're held for investors. So we are looking at the rules that have been around for now, 90 years or so, and make sure that they are adaptable and adapted to the modern world and to this new technology. So that will have effects on broker-dealers and asset managers and investment advisors and so forth. So that is one of the top priorities. But the main reason for doing all this and addressing these various regulations is to provide some certainty for people, because for too long now there was a lot of guesswork, and there was a very, I would say, a hostile environment as far as people trying to innovate. Lawyers couldn't give their clients opinions as to what was legal or not, and the SEC and other agencies sent very shifting views as to what was undergirding their view towards crypto assets. And so we are changing that, and so our goal is to give clarity and certainty. It will be undergirded by whatever comes out of Congress, but I believe that we have authority to move forward in these areas and provide that certainty and clarity for people.
Yeah, and on crypto payments, I thought it was interesting that this week a North Dakota federal judge voided the Durbin debit interchange rule and concluded that the Federal Reserve set it above what Congress required. And there are analysts this morning saying that this is a positive for alternatives payments options. And that includes crypto payments, right, Mr. Chairman? So I want to get your take on that. Instant payment networks, like a real-time payments or FedNow, these are options that convert payments into same-day transactions. And I know the Genius Act also furthered this. Do you have a vision in terms of how this changes people's lives in the coming years?
Well, certainly. This is a way to de-risk the markets because the longer that it takes to have clearance and settlement of transactions, the more risk there is in the system for something to go wrong, some black swan event to send things out of kilter. So if we move towards delivery versus payment, payment versus delivery in real time, obviously with some delays to account for mistakes or whatever fat finger mistakes to be built into the system.
Yeah.
But with a goal towards having pretty much instantaneous settlement and clearance, that would be ideal. That's what the blockchain offers, so a transparent mode to do that. And so I think that will deliver huge benefits to the marketplace that we probably can't even calculate right now.
Well, it's incredible, this moment in time that we're in, Mr. Chairman. And in addition to all of your work on crypto and on digital assets, you've also discussed easing back or changing regulations when it comes to private companies. And I want to get your take about opening access to private companies and equity for ordinary investors. Of course,
This is a world exclusive. We've got SEC Chair Paul Atkins live on the show.
Invest in private equity as well as crypto. Mr. Chairman, what are your thoughts in terms of how this changes options for investors? And what would be the goal here in terms of giving investors access to private equity?
Well, thanks, Maria. That's a great question because the marketplace has changed a lot in the past few decades, where the number of public companies now is half of what it was, say, 30 years ago. And the private market has really grown tremendously because there's a lot of capital out there looking for deals to invest in. And so the biggest thing that investors should remember about investing and the difference between that and, say, gambling is, A, you're helping to construct something in the economy and helping to grow the economy, but B, you need to approach things with a diversification goal in mind. Don't put all your eggs in one basket. That's one of the axiomatic bases for long-term investing. And so for investors who are looking to bolster their retirement savings, it is good to have diversification and to be where it's not really great to have a situation where large endowments and pension funds, like state pension funds and whatnot, can be diversified in the public and private markets, but 401ks cannot. And I think that's one of the goals of this executive order, to direct the Department of Labor and the SEC for us to work together to help make that a reality. But with proper guardrails around things, we can't just like fling the gates open and have investors rush in, where one has to be careful and you have to know what what the kind of the shoal waters are, that you don't run aground your boat on that. And some of that is the fees that are in some of these products, the liquidity issues. You can't get out in a heartbeat versus where you can in the public markets. So there has to be proper allocation, and investors need to know what they're doing and have advisors who also know what they're doing. So that's one of the goals to ensure that.
I like this way of thinking because, I mean, look, it's a great option, because there are some great growth stories in the private sector, but you're thinking about the guardrails that need to be in place to protect investors if, in fact, they do choose to go that route. Mr. Chairman, let me switch gears and ask you about President Trump trying to think about monetizing the government's stake in Fannie Mae and Freddie Mac. I broke the news earlier this morning that Wall Street is now cozying up to President Trump to try to get that piece of business. A lot of analysts are expecting this is going to be a $30+ billion deal as the government sells its stake in Fannie Mae and Freddie Mac. We're expecting that to happen later this year. Mr. Chairman, what kind of hurdles or what kind of information do we need to understand about this potential largest IPO we've ever seen, which could come to the market? And these are important companies, mortgage originators.
Yeah, well, I leave that again to the president and the other agencies. We are focused on disclosure at the SEC. And so, with respect to that, I think, there are many things to be worked out. Is there a government guarantee that will remain? How's that priced in, or how's that dealt with respect to the company? So we'll see. We're there. We stand by to help and to make sure that, that we're doing our job as far as looking at the disclosure and helping that transaction come to pass if indeed the administration decides to do that.
Understood. I mean, the idea is that the GSEs stay in conservatorship, but, there are issues that we want to.
We've got Paul Atkins right now live discussing Project Crypto. So I'm just going to pause it for the music, but hopefully we are all good now.
Board of directors, etc. Mr. Chairman, it's great to have you, and thanks very much for your leadership.
So that was Paul Atkins live. I will tell you all about that. I will go back to the beginning in a second. We did miss the first couple minutes.
Trump warning Russia.
So that is the end of that. So what I'm going to do is see if I can find us the first 10 minutes. Remember, Fox don't go live on YouTube. They make it difficult for us, and this was an exclusive with Fox. So what I'm going to do is just check if we have that, but I'm going to go back to the charts. They were trying not to say XRP there, I think. A lot of people were saying that in the chat. Ethereum liked it. XRP, what's it doing? XRP was up on the speech, but nothing significant said, unless we missed something in the first couple minutes. So I'm going to see if I can find that for us right now. Jerome, no. Paul Atkins, live. Paul Atkins, do we have it yet? We will have it soon. I'm sure we will have it soon. Paul Atkins, Fox. Okay, well, in the meantime, I'm going to tell you again about the big PPI decision yesterday and the interest rate cut. So we just discussed live on the show. For all our new viewers, thank you for tuning in. Make sure you have hit the like button, and I want to welcome you all in. Please hit the like button, subscribe. We cover all of these events live on the show. We'll come back to the beginning of that that we just missed. Just still seeing if we've got it. Not yet, but I'm sure we'll have it soon. We will have that soon. So, PPI came out yesterday, massive shock. We don't know whether we're going to still be in a bull market or bear market. My thoughts are we still will be in a bull market. That it was the biggest shock we've seen in a few years. Massive shock on the market. Take over the world. You said the world. Look, you have to look at the bigger picture. I'm just reading some of the comments there. I never thought I'd want a stock to go down, but will Rue ever fall back down? Yeah, I think it will at some point. I do think we're going to hit a recession. Now, I hope the recession isn't this year. I hope it's next year. If this PPI is a something that's happened in isolation and it doesn't come over to CPI, we're going to have to look at CPI and PPI next month, and it's going to be even more important than this month. If they don't go up as well, especially if CPI doesn't get affected, we can still be in for rate cuts in September, and we can also be in for a 50 basis point rate cut and also an altcoin season. I don't think that 50 basis point rate cut is on the table anymore, but if we get a really good CPI print next month, then people will start talking about it, and it's the sentiment that matters. If the sentiment's around a 50 basis point rate cut, it can still happen. Well, the markets can still react pretty well. The most important thing Paul Atkins said is we don't want you keeping it on a thumb drive, and what that really means. Yeah, we will be analysing that. We'll be bringing that back to you in a second. Thank you, Martyn, for pointing that out. Paul Atkins did just say that. So let me see, while we're analysing that, if we've got any more information. I think these come out. Let me see if Fox Business has put it out yet. They'll put it up any moment now, I imagine. Just keeping an eye on it so we can bring that back to you. Where has it gone? Nothing yet. I imagine it'll come up any second now, though. Did he finish talking? Yes, he just finished talking, but we want to catch the beginning of what he said because we missed only the first couple minutes, but I want to bring it back. I am just watching it. If anyone does have the link for it already, then let me know. Just checking a few sources there. They made some very good change in leadership as well. Yeah, there's this new SEC. They will approve the XRP ETF in October. That's my thoughts. I'm very confident that that's what they're going to do in October. That's when we'll get it approved. I'll bring you the SEC Paul Atkins as soon as it's live. I'm going to wait for it to come back and we're going to bring it straight back to you. They made some very good change in leadership as well. Crypto being part of 401ks has not even started yet, and when it does, we can expect a steady move up. Yeah, I'm still very bullish long-term on crypto, and all of these policies are great. But if we get inflation going up and CPI going up, then we have a major issue on our hands, and that is a recession, or either a recession or we'll see if the labour market can handle it, but probably a recession. What time UK and Trump Putin talk? Martyn will be covering that live. I think he'll be going live in about, I don't think the event's happening for another half an hour, or I don't actually know the times, but I don't think it's soon, but Martyn will be covering it live in 5-10 minutes. I don't know if Martyn's got that set up, but he'll be covering it. So you're not going to miss a thing. As long as you're live on this channel, you're not going to miss a thing. Martyn does... That event is all about Martyn. Martyn's done his research into that. He knows when that's going live. He won't be missing it. I'm just waiting so we can get this Paul Atkins interview back on the screen. I think it'll be any moment now. I'm just going to refresh these. I am quite confident it will be any moment now, so stay with me. Fox is very weird. You have to pay for a lot of different things. Paul Atkins Fox. I don't think it's been released yet. Nope, I think it'll go to their YouTube channel first. I keep my crypto under the mattress. It's high energy. Please don't tell anyone about that. Thank you for that information, Stephen Mariano. Saw on Watch Guru that just in 5.9 billion worth of Bitcoin and Ethereum options expire today. Do you think that's bullish or bearish? You can never tell whether it's bullish or bearish. It just means there's going to be volatility. I'm going to hedge with the SQQQ. Thank you very much for that information. So what we're waiting for is Paul Atkins' speech. We'll bring that to you as soon as that gets uploaded from Fox Business's end. They make it very hard. You can't really watch it live. You have to have all sorts of different accounts and licenses and stuff. We tried to bring you as much as we could, but it will be going live shortly and we'll bring you the full event any second now. We're also covering the Putin and Trump meeting in Alaska. That will be going live shortly. Martyn will be covering everything you need to know about that. He'll be going live with that on this channel, so you won't miss a thing. If you did enjoy today's newsletter about PPI, I gave you the full rundown. I hope you got, there was a lot of nice comments in the chat, but if you did enjoy all of that, well, this is the sort of information you get in the newsletter. We don't always go through the deep dives. We rarely actually do. And those days that you miss it, you're missing some critical information. So what I'm going to give to you is the link to become a member of the newsletter. Or you can get it for free, or you can get the annual plan. What I would say is get the annual plan. At least try it for a month. You get try it for a week. You get a 7-day free trial of this link. Go and click on it. The news every single day to your inbox, and there's a lot more we want to get through. The Putin talks, the Japanese rate hikes, that could be massive. We've got Project Crypto that I'm going to talk about in just a second. the robot news. You've got the chart of the day, all about, guess what it is today? Palantir. Go and have a look at that and the economic calendar. So go check it out. Every single day you get the newsletter directly to your inbox. If you are investing in the markets, what you need to do is make sure you've got the news, the real news, not the fake news on X. And this newsletter keeps all the real news. So please go and check it out. And there is the link. So let me just tell you a bit more about Project Crypto, and then hopefully by the end of this story we should have the link. Nothing there yet. I'll start with some of these stories. So Japan GDP surge strengthens central bank case for rate hike. And this is the carry trade. This is where it starts getting a bit more worrying. So Japan's economy grew at an annualized rate of 1%. How do we enter to win $1,000 in XRP? I'll give you that link shortly, Eddie Puckett. You can win $1,000 of worth of XRP live on the show. I'll give you that link in a second, Eddie Puckett. 1 second. What's that keyboard done to you? Sounds like you're punching it. I hate the keyboard. I'll break it live on the show. No, I'm joking. I apologise. I'll be a bit more quiet with my keyboard. I have actually got a stand coming from my microphone. Unfortunately, it didn't fit my desk, so that I need to order a different one. But hopefully you won't hear that any longer. So Japan's economy grew at an annualised rate of 1% in Q2 of 2025, beating the forecasted 0.4% and marking 5 straight quarters of expansion. The Cabinet Office reported a quarterly gain of 0.3%, 3 times the consensus estimate, with private consumption up 0.2% and business investment surging 1.3%, as well as well above 0.5% projection. The previous quarter contraction was revised to 0.6% increase, bolstering optimism about Japan's recovery trajectory. Japan's economy is looking pretty good. The surprise upside supports the Bank of Japan's hawkish stance, with interest rates currently held at 0.5%, the highest since 2008. Exporters accelerated shipments ahead of US tariffs, contributing 0.3 percentage points to GDP, and offset some tariff pressures through price cuts to maintain production levels. Economy Minister Rozai Alkazwa said the results confirm a modest recovery, but warned of downside risks from US trade policy shifts. The report boosted odds of an October rate cut, now expected by 42% of economists, and lifted the yen 0.3% against dollar posted released. However, analysts caution the full impacts of Trump's 15% blank tariff may emerge later, potentially limiting Bank of Japan's room to tighten policy further. But here is your first exclusive insight that now the October rate hike in Japan is now looking like it's a 42% chance of that happening. If we keep getting rate hikes in Japan, get ready for the carry trade. That carry trade can really bring the markets down. I'll come on to Paul Atkins in just a second. Hopefully we get that feed come back through to us shortly. I don't know where else I can find that. Maybe we find it on X actually. Let me go have a look. I want to bring that news to you again. Hopefully we'll have that on X. Paul Atkins. We've got another story here for you now, which is the US Treasury shifts course on Bitcoin reserve strategy. So remember, Treasury Secretary Scott Bessent, we were saying the US government's going to buy Bitcoin. Well, doesn't seem that way anymore. We've got confirmation on that. I'm just checking. Nope, the full stream isn't out yet. It's very annoying how Fox do things. They're not like the other people. They want to keep it all to themselves. So, Treasury Secretary Scott Bessent sent shockwaves through crypto markets after issuing conflicting statements on the government's Bitcoin purchasing plans for the Strategic Bitcoin Reserve. In a Fox Business interview, Bessent declared the US won't be buying Bitcoin. triggering a 6,000 drop-off. I don't think it was purely based on that, but obviously since he said that, the sell-off happened. Raising 55 billion in market cap within 40 minutes, mainly because of PPI. He has since reversed course on X, saying Treasury remains committed to exploring budget-neutral pathways to acquire additional Bitcoin for the reserve. So he came out on an interview and he got a lot of hate for it. People said, well, this is a change of course. He said the government will not be buying Bitcoin. And we sort of knew in the back of our minds there probably wouldn't be. They'll just be holding on to the Bitcoin they have or be taking gifts. But he confirmed that on an interview, and then later on X, and you can tell the only reason he tweeted this is because he got a few people annoyed, is he went and said on X that he's committed to exploring budget-neutral pathways to acquire additional Bitcoin for the reserve. The back and forth underscores uncertainty in the Trump administration's crypto strategy. 5 months after establishing the strategic Bitcoin reserve via executive order, the reserve currently holds between 15 and 20 billion in forfeited Bitcoin from criminal cases, totaling about 198,000 Bitcoin. Besant confirmed sales of existing holdings will end, but initially implied no new purchases, contradicting prior signals about budget-neutral methods, such as using tariff revenue or gold certificate reevaluation. Congressional approval may be required, and prolonged delays risk undercutting Trump's pledge to make America the Bitcoin superpower of the world. So keep that in the back of the mind, because it doesn't seem like the government will be buying any Bitcoin anytime soon, and I think you revealed that live on air. Have you heard of XCN? Yeah, we've heard of XCN. We've covered it live on the channel. And this is a story we were just covering. The SEC chair unveils Project Crypto. And I'm going to keep an eye out for that in case that comes through. If not, we'll cover it later, but I think it should come through any second now. So we just heard from Paul Atkins. We'll hear back from him in a second. Sources say that the SEC chairman, Paul Atkins, will appear on Fox Business, and he just did, to discuss Project Crypto, a sweeping modernization push unveiled July 31st as a commission-wide initiative to bring US financial markets on-chain. The plan aligns with President Trump's broader directive to position the US as the crypto capital of the world, pivoting dramatically from the prior administration's enforcement-driven stance. Atkins detailed 5 focus areas: defining when crypto assets qualify as securities, commodities, or stablecoins; modernizing custody rules while protecting self-custody rights; authorizing unified super apps for crypto trading, enabling tokenization of traditional securities like stocks and bonds, and creating a fast-track innovation exemption for new business models. He stressed that most crypto assets are not securities, and directed staff to propose rulemaking with public comment and temporary exemptions to avoid obstructing innovation. Besant called this initiative the boldest and most transformative crypto vision ever laid out by a sitting SEC chair, predicting it could reverse the crypto exodus triggered by prior regulatory crackdowns. Observers believe it could spark a regulated ISO market 2.0 and channel institutional capital into tokenized assets. Full implementation will take years, the framework may help the USC's dominance in the emerging market for tokenized securities, already being targeted by major Wall Street players. So what we've got here is a completely new SEC, which is completely different to the Biden administration SEC, and we are very, very excited to see what they unfold with Project Crypto and with all of these approvals that we are expecting in October. We expect lots of XRP ETFs to be approved. We also expect lots of altcoin ETFs to be approved as well. I'm once again going to be just checking if we've got any news from this. No, we don't. So what I'll probably be doing is coming back and just covering that at a later point. We did cover most of it. We only missed a couple minutes of it. So I hope you're okay with that. We'll come back and cover that. So what I'm going to do now is end the show and send you to Martyn. Martyn's going to be covering the Putin-Trump event. And before I do that, let me just make sure there is a stream set up. Let me check. Okay, I'll wait a couple minutes because I think Martyn is just about to put that live. So let me go through a couple of your comments and then I'll end the stream. I hate the keyboard. What do you mean by the carry trade? Basically, everyone uses Japanese interest rates, which have been historically low. I mean, they're at 0.5% now, and that's the highest since 2008. So the Japanese interest rates are very low. They borrow money, and then they buy US stocks. And as soon as interest rates start going up in Japan, then the issue is they get liquidated, and then the markets come down, and then you get a big move towards the downside. It can be minor, it can be major, depending on the situation at the time. So because Japanese interest rates are going up, we can have a concern where people that are borrowing money might not be able to pay the money back, and then the panic leads to liquidations. I'm old, and I can still remember buying the whole newspaper for a quarter. Oh, well, our newspaper is for a quarter as well, Eddie Puckett. And I'm sure inflation is, I'm sure you can't get a newspaper now for a quarter. So, here we go. I'm going to give you the link to get $1,000 worth. I have two events, that the next one and the second one on. Oh, okay. Sorry, I didn't see. I think Martyn already has the event set up. I just couldn't see them when I go on here. That's weird. The events. I can't see the events. Let me go here. I'm going to go into live. I have two events, the next one and the second one. Oh, right. Martyn has two events coming up. He will give the link in a second. Sorry, I understand now. Okay, I'm going to give you the link for the giveaway. martynlucas.com/giveaway is the competition page. This is where you can win $1,000 worth of XRP. Here is the link. All you have to do is click on that link. Once you click on that link, you get taken to a page like this. This page, I'm on dark mode, so it might be a little bit different for you guys, but you basically come to this page. Over here, it will tell you to sign in. Once you've signed in, then you'll have access to all of these. And what these are is just different ways you can win tickets, get tickets. The more tickets you get, the more likely you are to win. You can win with just one ticket. There's no pay to enter. It's free for all, free for everyone. All you have to do is go and click on these. You click on this and then you repost Martyn, you claim your tickets. If you've already reposted Martyn, then all you have to do is click on this and you get your tickets. You follow us on the newsletter, the free version, or if you already do on the paid version, but you'd have to pay to get these tickets. You click on that, you type in your email, and that's as easy as that to just get 150 tickets. You can enter your magic number here. We sometimes do magic numbers in the newsletters, in the live shows. You can post on X this and you get 100 tickets. You can follow Martyn. If you already follow Martyn, you might as well claim your tickets. And basically, we'll be doing a live giveaway on the show for $1,000 worth of XRP. You can do what you like with that money. There is a link to that giveaway. Another quick look at the markets. They're recovering today, but I think this is going to end up in a lower high and we might go down. Remember, I said the month of August will be a sideways moving month with probably more downside, especially for XRP. Stock market's not doing too badly. I mean, it's basically at all-time highs, which is quite surprising given what's going on. And Martyn, that's why Martyn's been selling. I mean, this is the market's at all-time highs. I mean, we literally got all-time highs on the S&P 500 today with that crazy PPI news coming out. Bitcoin dominance is heading down. I would expect that to start coming back up at some point soon, especially if we get a crash. I'm staying in the markets. I'm prepared for the upside. I'm prepared for the downside. It's just a bit of a weird situation. Go and read that newsletter, the deep dive piece, and see what camp you're in so you know exactly what you should do. Let me go and just see over here. Did we get that come through? We still don't have the Paul Atkins, but we covered most of it. We only missed the first couple minutes. Let me see what some of these comments are. Can you check the news? The cost will stay the same because we won't be paying jacked up tariffs countries put on America. The cost will stay the same because we won't be paying jacked up tariffs countries put on America. don't quite know what you mean by that. USA 4547. I don't think that's how it works, but whatever makes you happy. I'm not here to get political about anything. I'm just trying to give the facts. Marginalize Liguana and get some income flowing for the economy. Yeah, that's one way of doing it. Sensei bringing the facts. Thank you very much. High energy investments. I sold waiting for a drop. Good luck to you. Remember, the markets could be irrational. We can go up even with bad news, and that's what the S&P 500 is doing today. Martyn, did you put some money into crypto? A nice spike just now. Crypto is moving up. Yeah, that's what we were expecting. Wasn't Paul Atkins supposed to be on a show this morning talking about Project Crypto? Yes, we did cover that live. We can agree to disagree about Powell. Yeah, it's fine. I think he's clever. You think he's dumb. Let's agree to disagree. This is the thing about the channel. It doesn't matter. We all have our own opinions. Powell is politically motivated. Thank you for your opinions. We all have opinions. I try and not share my opinions, but I said Powell is clever today, so I guess I shared some opinion. I think he's certainly much cleverer than a lot of us. He's got quite a few qualifications. Not to say I agree with what he's doing or I disagree with what he's doing. I'm just saying that's the reason he's held rates higher for longer, is because inflation, and he was right that the tariff inflation is coming through, and because we saw the evidence of that yesterday. And now you can start arguing that is the inflation data all fake. That's a whole different conversation. I don't think so. Powell is a good kid. Just needs some guidance and he'll be fine. That's what Big Papa Orange Man there is for. You called XRP on spot. You called XRP on spot. I shorted here. So what you're saying is be prepared. Yes, Powell made a mistake in 2022. He didn't raise rates a minimum of 100 basis points after that Jackson Hole meeting. He backed us up into a corner, and now he's not going to make any sudden moves. There we go. Paul Atkins said that on his X Twitter, not sure. Thank you. Yes, he did. Real-time payments. Thank you, Stephen. Past the moon, we're going to... Right. XRP is trash. ADA is the people's coin. Yeah, I did long ADA the other day. We made a quick 100% gain on that. And then we sold it before the drop. So... time to go over to Martyn. Unfortunately, we didn't get that Paul Atkins interview. We watched the last one. We sort of missed the first 2 or 3 minutes. We don't have that link yet. That's fine. Retail sales were also changed. Now they were up. Retail sales, yeah, those retail sales change. Jobs reports change, but inflation doesn't tend to change. Buy with conviction, stay out of the noise and have patience. We are still very early. The parabolic run is going to be insane. I agree. Not really bad news if I'm honest. PPI wasn't bad news. Well, you're disagreeing with everyone in the world, I think, on that one. PPI was pretty bad. Otherwise the market wouldn't react like that. With RRP hitting lows, do you think there's a push to diminish the Fed's role and move to Treasury stablecoins? With RRP hitting lows, do you think there's a push to diminish the Fed's role? To be honest, I don't even know what that is. Maybe I'm just being a bit stupid this morning. But thank you for your comment. Retail sales were also changed. Now they were up. Yep, I've come back to that comment. I'm just keeping my nose to the grindstone and investing in crypto and stacking some gold and silver. I agree. I think gold and silver always should be a part of someone's portfolio. Again, not financial advice, but I think gold and silver is a very important part of people's portfolios. What do you think about HYXLM and XRP? I like them all. Please smash the like button, get to the chopper. Yes, here is the like button. And here's the subscribe button. Please do hit them. We're going to go over to Martyn's show. Thank you everyone for tuning in. We've got the link over here. It will automatically take you to it. It's going to be a very important show, so stay with us because this is something that can definitely move the markets. And what is it? Well, it is, don't know why it's not coming up there. It's the Putin and Trump meeting. It's going to be a very interesting one. We're going to be covering it live on the show. Let me click on the link, see what the first stream is all about. The first stream is all about the uncertainty and Martyn selling the markets. And then we're coming on to Putin and Trump. So a lot going on. 2 streams back to back from Martyn for you guys straight after this. So that's the next one we're going to. I think Martyn's already done that. Yes. Okay. Thank you everyone for tuning in. There is a link straight up above. I'll give it to you in the comments as well. Martyn's starting very, very soon, so go and check him out. I hope you enjoyed the extended show today. We'll be back for the Sunday show in a couple of days' time. Good luck. Remember, be prepared for the upside, the downside, and the sideways action. And hopefully, with next week's Jerome Powell speech, we can have a better idea on where we're going in the markets. I'm still bullish. I'm still in. Until next time, take care of yourselves and each other. Bye-bye.